Okay, hey everybody, thanks so much for joining us. My name is Greg Lewis. I am the marketing manager here at MetaStock, and I'm coming at you from our, let me take my glasses off because they look like they're really glaring in that window. Coming at you from our satellite studio in southern Texas, where it is very bright and hot outside. If it's not in excess of 100 degrees and over 50% humidity wherever you are right now, consider yourself fortunate. Today, we have a very special presentation by our very own Jeff Gibby, who will be coming at you from our headquarters in Salt Lake City, Utah. Jeff is a great friend and a great presenter. I know you're going to like what he has to say about MetaStock. If you haven't heard about MetaStock, wait, before I do that, please go ahead and like and subscribe if you have a minute. I mean, if you like us, don't like and subscribe if you don't like us. But if you do, we'd really appreciate it. It helps us. And also, you'll get notified whenever we have a live presentation. And we usually do about 2 of those a week. And we also have conferences and marathon webinars called summits that you'll want to know about. In fact, we have a summit coming out a week from Saturday, July 8th. And you can register to that by going to metastock.com/traders-summit. I will put it here in the chat here in a minute. Also, another thing I should remind you about today is to go ahead and participate. Jeff is a great presenter and he loves questions and he loves symbol requests. And so just chat those in as you like, and he'll be very responsive, I promise you. Also, if you have a second, just go ahead and let us know where you're coming from. I see I got to put my readers on though now. I see Francis is giving us some greetings from Stratfordshire, England. Stratfordshire. She says it's quite pleasant here, about 60 degrees Fahrenheit. Well, congratulations to you, Francis. I think it's pretty nice up in Utah too now. But it turns out when you live on the border of Mexico, it gets hot. So it's really hot here. Okay, I'm going to go ahead and play a quick video, just so in case you don't know about MetaStock, who we are, or what we are, this will give you a chance to become acquainted. And then I'll be back and we'll be starting our presentation with Jeff here in about 5 minutes.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, I hope you enjoyed that short presentation. We have about 1 minute and 30 seconds before we start here. I'm trying to think if there's anything else I wanted to mention. Jeff will be introducing himself, but I do want to let you know, in case he neglects to mention it, he has been with the company for a really long time. He has probably done, he's done countless presentations, thousands, I would guess, honestly, hundreds anyway. So, he's always great. He's always really great candor, and he's really open to questions. So just really ask him anything you want. Anything. I dare you to ask him something that he doesn't know. I dare you. I dare you. Also, once again, if you'd like this, we'd love it if you'd like and subscribe. I just like pushing a little button to make that thing pop up above my head. It makes me giggle. But yeah, if you hit the thumb and you hit the bell, then you'll be notified, and we'd be very grateful. We've got about 30 seconds. Again, I'll put information here about how you can chat live right now with one of our product professionals if you choose to do so during the presentation. That's metastock.com/sales chat. And also put information here because I know Jeff is going to come up with some kind of swell offer for you to get MetaStock. I'll put that information here in chat, and also put information about don't forget to chat if you want to chat in our YouTube chat. Remember, we are broadcasting on YouTube and GoToWebinar, so be wary of that. Anyway, I got to start the presentation. Let's go.
Hello, everybody. I'm Jeff Gibby over at MetaStock. Welcome. Greg, you're still live, just so you know. Okay, no worries. Good. Hey, thanks for coming today. Hope you're doing well. My name is Jeff Gibby, as you probably know. I'm going to go ahead and doing a little bit of presentation today, and I like this one. Well, I usually try and like all of my presentations, but this one I kind of like to highlight a few of the things. And the way I kind of would explain this is, with MetaStock, we usually get kind of focused on what the power tools are, like the scanning, testing, some of those major tools. And we don't have really, when we kind of start to talk about MetaStock, we don't have the opportunity to talk about some of the really cool little things that are like what I would call the hidden gems of MetaStock. So I'm going to show you a few of my favorite tools, a few of the things. Some of them I've personally worked on over the years, some of them I haven't, but just some of the things that I think are really helpful. Before we get started, though, let me read this legal disclaimer to you. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software products. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. As we go today, if you have questions, every time I look over here, I'm looking to see if you've asked me a question. So if you have some questions, whether you're on YouTube or not, you go to webinar, whatever it might be, however you're joining us today. If you have any questions, make sure to ask them, and I'll do my best to not miss them.
Hey, Jeff, I have a question.
Yes. Go ahead.
Whatever you did to the mic before the session started, you might want to just put it back to wherever it was, because it's actually, I'm assuming I'm not the only one who hears crackling, a little bit of crackling going on. So it might be a little hot.
Okay, let's see. Let me look at the back of this thing.
And
I didn't really, I thought it was on the settings that it was on, but I can try.
Maybe just putting it closer to your mouth, if you can.
Okay.
And then turning down that's actually beautiful. I didn't realize you guys had it so far away from you. You should have it close. It could be in the shot. It looks very professional.
Think it can be. Well, it's not kind of on the stand. Well, I'll leave it right here.
Okay, that already sounds better. Give me some tests. Give me a couple. Hey, test. This is Jeff.
Okay. Okay. I kind of forgot what it was. Okay, if you have questions as we go, and you're not Greg, no, I'm just kidding. Just go ahead and chime them in, and we will do some audio engineering right here on the fly as we go.
Okay.
Anyway, I'll introduce myself. Greg, is this sounding better?
A little bit, yeah, I think so.
All right.
Okay.
Because I don't think I actually changed anything.
Jeff, you have the voice of an angel, and I don't want to deny anyone that.
All right.
Okay, here you go.
Cool. Anyway, I started here, I guess, back in '97. So I've been here 26 years right now. When I started here, we were just kind of now I'm all out of my rhythm, but that's okay. I'll find it again. We started here. MetaStock itself has been in business since 1982. When I started, we were owned by Reuters, had been part of Reuters for about a couple years. And we still have a really good relationship with Reuters. They become Thomson Reuters and then Refinitiv. But we actually bought ourselves back from Reuters about 10 years ago. And so there you go. There's a little history on MetaStock. For me personally, I've worked here for a while now. I love it here. It's a great company. I like working for it. One of the things I really, really like to talk about with the software, and one of the things I'm going to talk about today, is the fact that we've been rated #1 by the readers of Stocks and Commodities magazine for 30 years straight. And I really, so this isn't an award that the editors give. Every year they pull all of their readers. It's a great magazine. They've been doing business since 1980. But every year they ask, what's the best software that you use? Or what's your favorite software? And for 30 years straight, this year, we've been rated the #1 software in our price category. So we're very, very proud of that. The other thing that we're really proud of that I would like to talk about, just real quick before we kind of go into kind of like the actual session, what I'm going to talk about today is just how good the staff is. My mother-in-law actually was working on a project for her school. She's in school. And she wanted to know what I felt like was our biggest things. And I was like, well, easy. We do full market scanning. I'm going to talk a lot about full market scanning. Our back tester is really good. It's easier to so I gave her a few things. It's really easy to kind of customize formulas. This is exactly what I told her for her project. But I think the biggest advantage we have is our staff. Like if you have questions, you can call us up. We'll answer them. If you have support questions, we actually keep more people in our support team than we keep in sales and marketing put together. So I think they do a really, really good job. In fact, there's a lot of times where for the whole week, they'll get 100% perfect score for their support surveys. So in any case, that's about what I'm going to talk about for MetaStock. Today, there's a lot of topics that we can talk. Today, what I want to talk about is some of the things that kind of we don't talk about it. Some of the hidden gems in MetaStock. So let's go ahead and kind of drill into that. I hope you're using MetaStock. This is a class that kind of I gear towards MetaStock users. If you've been using MetaStock for a while and you haven't used some of these things, well, play with them. They're cool. They're included in MetaStock. There's no additional cost to get them. And I really, really think they're pretty cool. So let's go ahead and talk about them. So there we go. Today's class. And there's really 3 things that I'm going to talk about. And I'm kind of going to do them in a little bit of a different order. But all of these things are built into MetaStock. So the first thing that we're going to talk about is finding breakouts. And Adesso or Francis, welcome. Thank you for saying hi in the YouTube room. One of the things I don't do a lot of when I'm actually doing presentations is find a lot of prepared examples. So if there's a particular stock that you want to look at, I can show you it on any stock. Like just give me the name of the ticker, the name of the symbol, and we'll look at the stocks that you're interested in. What I want to start with, though, is I want to kind of talk about why I feel like it's important to trade with trend lines and support and resistance tools and things like that. There's a set of tools in MetaStock. I've actually got a chart of this is the DIA ETF, and I've applied a template to it, and it's called the Dynamic Trading Tools. And just so that I can kind of show you exactly how that works, I'm going to open up a new chart. I'm just going to show you how you can open up this view of the chart when you're opening up a chart. So generally, like if you don't have MetaStock, that's fine. I've also got a chart of Meta open. But if I want to just look at this view, I've got a lot of charts open, it looks like. Let me just go ahead and close everything down. But if I just want to kind of look at this view, what I'm going to do is I'm going to go ahead and type in the symbol. Let's go ahead and go with meta.o. And right here where it says template, what I'm going to do is I'm going to apply the template. It's called Dynamic Trading Tools. Okay. And this is a template. It's shipped in, like, I think we started shipping it in 17. It also shipped in 18. It's just a template. What this is going to do is it's going to apply all of those trend lines and support and resistance levels. You don't have to actually manually drag them off onto the thing. So what I'm going to do here is I'm just going to add these particular levels to the Facebook stock, which is now Meta. And while I'm at it, I'll make a joke that we've had Meta first. But in any case, what we're going to talk about here is just kind of like what's being drawn on the chart, because you'll see automatically what we're having is we're going to have a bunch of lines on there. And I'm just going to go through and kind of talk about it. Now, I've actually gone through and on the template for this, which is our demo room, I've actually increased the lines so that like you can see them a little bit closer. The lines aren't quite as dramatic when you actually apply them, but you can change them and darken them if you want to. What I'm looking at here is I'm just going to kind of go through the lines from top to bottom and just show you exactly what's being drawn. So right here at the very top, we've got shorter term resistance. We've got shorter term support. And these are a little, when I made the template, I made them a little bit lighter, just so that they would stand out a little bit. Right here, the darker green is going to be longer term resistance. And then the darker red is going to be longer term support. And so those are automatically drawn on. In MetaStock, the algorithms, what they're going to do is they're going to actually look for where it sees support and resistance on the chart. And so instead of kind of saying, okay, well, is it here? Is it here? It's going to automatically draw those for you. So you can kind of take the subjectivity out of it. Since it's being drawn automatically, it's going to be very, very subjective. So there you go. So just to recap, we have the shorter term resistance, the longer term resistance support right here, or resistance. So we've got short term resistance, short term support right here, which we broke down here. And we have, as you remember going into last year, maybe you don't remember, but we had kind of a pretty dynamic sell on Facebook. Like it just kind of had a pretty big rundown where it went from like 321 on the left-hand side to about 90 on the bottom. So it lost a good chunk of its value. But right here, you can see where it broke through that support, kind of came back down, rallied up, didn't quite make it, and then just kind of it set a new resistance level right here, which it hasn't broken until just recently. So all of this is automatically drawn now. Okay. You'll also notice right here, there's a trend line that's pointing down. And this would be kind of like what we would call a longer term trend line. So a lot of times if you're looking for, over the years, we've had a lot of people that want to find stocks that are breaking through longer term down trend lines, or that are kind of breaking down through up trend lines. And so because these are automatically drawn, you can see them, but you can also scan for them, which I'll cover in just a second. So in any case, these are actually being drawn automatically. And I think it's one of the things that I've kind of learned over the years. Trendline breakouts and support and resistance breakouts are things that people really, really want to be. Even like the original turtle traders, their whole methodology was looking for basically breakouts of support and resistance. If you've heard of the turtle breakout, it's basically looking for a breakout and then buying into that breakout, or looking for a breakdown and buying into that breakdown. But I think one of the other things, like we've done a lot of webinars with different partners over the years, and one of the things that kind of sticks out to me is some advice that we get from Vince Vora, one of the people we work with all the time, is he says he likes to find stocks that are breaking out of all-time support or resistance. And because once you kind of break out of an all-time high, there's no more resistance. Really, there's not. You can basically get it. It has a tendency to keep going, but not all the time. But it does have a tendency. So I love the fact that these are automatically drawn. I don't like the way this looks on Meta. If we're looking at this as a trend line example, right here, as this started to fall apart, you started to get this down trend line that wasn't broken until about 12:30, when it was finally broken up, and then the trend started to change and started to go up. So if I was able to find Meta on a scan or an exploration right here, that would have been a really, really good time to buy. Also, if we're finding stuff that's breaking through long-time support, or down through long-time support, yeah, right here, we had a really good breakdown on support. So it can be a really good way to find these, is to kind of look at this. In the meantime, since it broke up through this downtrend line, we've kind of reversed trend. We've come back up here. And I thought it was really interesting. I was looking at this chart as kind of getting ready for the chart. But not only did Meta start to go up here, it broke up through this upper old support level, kind of did a little bit of a cup and handle type of a pattern right here. But this support level held, got up to this resistance, had a little bit of a pullback, and then you gap straight up above it, had a little bit of a rounding bottom pattern where this held as support and kind of broke up further. So I know a lot of people over the years, they want to find when stocks are breaking through support or resistance. They want to find when they're breaking through trend lines. This is a good example of how that could be profitable in your trading. So one of the things that we have in MetaStock is we do have the ability to go in and scan for these moves. Since these are drawn on the chart, not only are they not subjective, they're totally objective. It might be subjective if you agree where the line is or not. But since they're completely programmed for you, I can also run a scan that's going to allow me to find exactly on the chart where that support and resistance level was broken and how many days ago it was, et cetera, et cetera, et cetera. So let me show you how that works. And again, if you have questions, don't be shy. Like MetaStock says, type them in. I'm always looking over here to see what the questions are. So for me, let's go ahead and kind of see if anything's breaking through any of these support and resistance levels. And I'll just go ahead and kind of walk you through how you would set up the scan. So like here, you can go ahead and click on the Power Console again. I'm going to go ahead and click on the Explore button. One of the things I absolutely love with the new version of the scanning is if I know what the scan I'm looking for is, I can just type it in the search. So I know that these are called DT. DT, just so you know, it stands for Dynamic Trading Tools. And so I'm going to go ahead and click on DT. You'll see right here, there's 4 matching scans that start with DT. There's support and resistance long-term, support and resistance short-term, trendline breakouts long-term, trendline breakouts short-term. So just for the purpose of showing you how this works, I'm going to run the support and resistance long-term, okay? And then I'm going to do a scan that I normally do. And you can do whatever markets you want. One of the things that we have a huge advantage for is just the breadth of data that we have available. Like, so you can apply this anywhere you want to, on any market that you want to, as long as it's provided by Reuters, and or I should say Refinitiv is, I should use their correct name now, but I mean, they cover 95% of the global market cap. So what I'm going to do though, just to kind of keep the scan fast, we're going to do the Dow Industrial Average, we're going to do the S&P 500, and we're going to do the NASDAQ 100. I'll go ahead and start that as an exploration. It's going to run through that, and it's going to go in and just basically give us a list of what stocks have broken and how long ago they broke. And so as soon as it's done, I'm going to go basically show you. So there you go. All right. Almost done? Yeah. Let's see. Okay. So again, with this one, the rejection rate isn't so high because I kind of like the way that they've done this particular scan. With a lot, what they're basically doing is they're showing us how long ago something broke up or how long ago something broke down. So if I'm looking for something that broke up through resistance, for example, I'm going to be focused in on this breakup column. And this number tells me how many bars ago it broke up. So I scanned this on daily data. You can do whatever increment you want. But if I sort it by the breakup column, I'm going to be able to see how many days ago something broke up or broke down. So let me go ahead and sort on that column. Here we go. And the non in the column means it never broke up or broke down. Okay. What I'm going to come down here is I'm going to look for stuff that has broken down within the last 1 bar ago, 2 bars ago, 3 bars ago, et cetera, et cetera. So you can very, very easily, it didn't necessarily have to broke up on the previous day on a daily bar or the previous hour. You can see everything that's broken up and how long it's broken above. The other thing it's going to calculate is on what type of a volume. So right here where it says up volume percent, that just tells me it broke up on minus 26% volume. So it was 26% less volume than it normally was on the day that it broke up. So let's take a look. Looking at that, let's take a look at NRG energy. We'll just kind of get an idea of kind of maybe the samples that this are coming through. So I'm going to go ahead and open up the chart. We're going to go ahead and click on the minimize button here. And here you can see where that breakup happened. It broke from being in this. I like this too. So right here it had that resistance level, broke up just about 3 days ago. But you also see that before, I mean, if you've been doing support and resistance for a while, you know that old support turns into new resistance, and likewise. But right here, not only did it break up above this resistance level 3 days ago, it's holding up above it. It broke up on 86% more volume than normal, and we've been above it for about 3 days. So if I'm looking at this, I could kind of look at where the other resistance areas are, maybe use that as a target if I wanted to position a trade. Or like if I'm looking at a trade that I had maybe found on a different scan, I could apply the template and see where the support and resistance levels are. Because if I'm getting a signal to buy right here, what I'm likely going to do is I'm going to wait until it actually goes above that area because I don't want to buy right where resistance is. I want to wait until it kind of clears that. And so there's a couple of different ways you could look at this. But I love the ability that this is all automated for you. I love the fact that you can actually scan. So there you go. I hope that's helpful for you. Again, the name of the template, if you want to apply it to your chart, is called Dynamic Trading Tools. The name of the scans are called DT. And so just scan for them. You can use those to scan. So that's the first thing I wanted to show you today. The second thing I wanted to show you is a methodology that we call the Haguro breakout method. Okay. And there's a little bit of a story that goes along with this one. So I just kind of want to talk to you a little bit about where this came from, because this is a project I was personally involved in probably about 10 or 15 years ago here at MetaStock. And it has a good origin story. At least I really like kind of the way that this worked out. So what I was doing, just to kind of give you the breakdown of kind of where this came from, I was down in Australia for a trade show. And again, yeah, this was pre-corona, pre-lockdown, and we had a trade show as MetaStock, the Australian technical, or at an Australian trade show. And during kind of one of the slower times where I wasn't talking to MetaStock or talking about MetaStock to a customer, I just kind of walked over and I talked to somebody that was running a booth a couple of booths down that had a big sign that said ATAA above it. And nothing more descriptive, it just said ATAA. I was like, well, what is this? And so I kind of went up and I said, hey, I'm Jeff. I work for MetaStock. This is kind of what we do. And we met him. I met a guy by the name of Gary Burton, who at that time was doing a lot of classes, I guess, for the Australian Technical Analysis Association, which is what the ATAA stood for. And so I was like, oh, that's interesting. What are you teaching? And so we kind of talked a little bit about the methods that he used. And one of the things that kind of sparked some interest for me was he started to talk to me about this method that they use for weekly analysis to kind of identify candles. And it was called the Haguro method. So some background that you don't need and maybe don't care about. This ship is called the Haguro battleship. It was a World War II era battleship. It was actually named after one of the Haguro mountains in Japan, which I guess has some religious sentiment. So in any case, just to kind of get off the story part of it, I was talking to Gary and I was like, kind of tell me about the method. Tell me what you're doing. And this is a method that was designed by Shimizu, and it was called the Heguro method. And what it is used for is it's used as a weekly kind of forecast that provides support and resistance on a weekly basis. It provides key turning lines for candles, and it provides a fairly accurate forecast of what you can expect in a coming week. So he kind of mentioned the Haguro method to me and kind of was talking to me a little bit about it. And I was like, well, this is really interesting. I'd like to take a look at it. And what I had him do is I had him actually send me a PowerPoint. I remember he sent me like this massive, like 800-page PowerPoint. It was, I just remember, I don't remember, it was probably, I'm probably embellishing a little bit, but it was a fairly large PowerPoint, but it talked all about the Shimizu. Yeah, that's right. Sorry about that. Jerry says, hi, we're currently the VP of the ATA. Yeah, hello, Jerry. So yeah, we love working with the ATA. And I didn't say that just because you're there, but so Gary was great. He basically sent me this PowerPoint. We worked with it and designed it. And basically, this is kind of where, and I remember that I really, really was kind of like interested in this. So when I got done with it, I put it together. I sent it over to a friend of mine, the late Dennis Peterson, and he did reviews for us back then on stuff for stocks and commodities. I said, hey, we worked on this. Here's kind of the story of it. This is what it's developed and designed for. And I want to get your opinion for it. And so I sent it over to him. I sent the code over to him. I kind of sent the information that Gary had provided for me for the code, and I had him talk to Gary a whole bunch. But one of the things that I found really interesting is Dennis really liked it too. Like he normally, like I'd send something over to him, and if he liked it, he'd do a review. But in this case, he decided to break it into two reviews. The first review actually was going to kind of talk about the integration that we had designed for MetaStock. And I thought that was awesome. I don't code a lot. I'd actually made this system with a lot of help with Gary and my programmers here. But one of the things that he said in that particular review that I remember at this day is like, wow, this is well coded. And I'm like, oh, okay, that's cool. But then he did a second review that just talked about the methodology and how you could use it and all that kind of stuff. And he really, really liked it, gave it a very, very positive. So a couple of things to kind of note about the Haguro method. One, it's designed to provide support and resistance on a weekly basis. It gives you some key turning lines, and we'll talk a little bit more about that. I call it a fairly accurate forecast of what you can expect for weekly movement. Okay, and so we'll kind of talk a little bit about kind of how that works and kind of how that all fits together. But let's kind of jump in a little bit more. A lot of what let's no, forget. Okay, so yeah, I'm not going to kind of get too. It's totally fine, Greg, for you with a Japanese background to correct it when I say something wrong. You're totally fine. I do not take it personally. So Siki Shimizu, I believe is how you would pronounce that, but Greg might have a different feeling. So a lot of what we work with here, I'm going to say it again, just so that I know Greg, when I say something wrong, I think it offends him a little bit, but that's okay. A lot of what we have to do, or what the work Siki did, or in the Haguro method, had to do with like the midpoint and where a candle opened and closed in relationship to the midpoint. Okay, so the midpoint line, obviously, if you take the high and the low, you add them together, you divide two, you're gonna have a dot that's right in the middle of that chart. Okay, depending on where that midpoint falls, that depends on how the candles are classified. And so you can see there's a classification for each of the levels right here. I'm gonna come back to that because another thing that is based on the midpoint is where they actually put in support and resistance. So the midpoint line, let me actually just open up a chart so we can show you what this looks like on a chart. We're looking at an NRG right now. What I'm going to do is I'm going to apply the Heguro template here to it. No. apply template. What we're going to do is do Haguro. Okay. And I'm going to use the template's periodicity, which should change this chart to a weekly form because this was designed with a weekly chart in mind. So let's go ahead and do that. And what you'll see is you're going to see this line that when it initially starts, it's at the middle of a bar, but it doesn't change every time. And this is what we would use as the Haguro support and resistance line, or the midpoint line. Okay. Now, the rules for when this moves are very, very specific. So that I don't get too messed up when I kind of explain it, I'm going to read it to you from here and then just show you what it means. So we set the new midpoint line. This midpoint line changes, but it only changes if the high-low range, the difference between the high and the low, the range of that line is greater than the week before and then the week before that. So if we kind of look at where this is on the chart, right here, this is where it changed. That means this week had a smaller range. This week had a smaller range. None of these weeks had a greater range than the week before and the week before. So if we're looking at here, if we're trying to determine, do I want a new midpoint line? The software does it for us. But if we were to say, hey, is this a new midpoint line? If we look at the range, the difference between the high and the low, we compare that to the previous week and the previous week. If it's the biggest of those three levels, we'll draw a new point. Okay, and the last time that happened was right here on this bar that's labeled 60. Okay, so this line acts as support and resistance, meaning if we're trading above it, as we are in energy right now, we would consider this as a major support level. Okay, or maybe a Haguro support level. If we're trading down below it, like we are here, we would consider it our area where it's going to offer resistance. Okay, cool. All right. Okay. The other thing we have with the midpoint line is we also look at a very, very unique numbering system. So if we go to the next line, each line in the Heguro method is categorized. So you see right here, 1, 2, 3, 4, 5, 6, 7, 8. All of these relate to a different candle pattern. So for example, right here, this the open is above the high, but it's below the midpoint, and the close is below the midpoint, and of the high and the low. So you get kind of a bit of a doji bar. Here, the open is above the high, or the low is below the high, and so every one of these are different relationships of where the actual bar is on the line and where it actually orients. So, and this is all of the possible combinations, with the exception of an extremely flat doji. So if we have an exact doji where it's the midpoint is exactly the same open and close, that isn't classified as a line, but every other combination is. Okay. So right here, you've got all of these bars classify with different lines. Okay. And they're numbered. So you've got 1, 2, 3, 4, 5. And that is the numbering that we're actually putting together right here. If we take a look here, you've got a 2-line, a 2-line, a 2-line, a 2-line, 16, 16, 2, 16, all the way back. And you'll notice that we've color-coded 3 and 15 specifically. Okay, you've got 15 here, right, before kind of a bit of a turn down. You've got 15 here, you've got 15 here, and you've got a 3 right here. Okay, and so those are kind of color-coded a little bit differently because they're more significant. Okay, and so those would actually be reversal candles. What we did for each of the lines is we went in and kind of created kind of an expectation for the week. So if we're looking at weekly bars and we have a line 2, which is exactly what we're seeing in energy, what I'm going to do is I'm actually just going to kind of open up our commentary window, and it's going to kind of give us an idea of what actually that means. So right here, this expert, the Haguro method, based on the work of Gary Burton, or created by Gary Burton, created by this guy. Right here, basically what it's going to look at is it's going to tell you exactly where the midpoint is, and it's also going to do some range measurement. And this is important with Heguro because as you get extended in range, the more significant a candle would be. So the more you get out of the mean, or the more you get away from the last high or the last low, the more significant the candle is. And Gary and I did a lot of work to kind of quantify that. And this only real thing that we contributed to this is, when do we want to measure something as significant? So what we basically did is we kind of measured, we create a measurement tool that measures how much distance the price had traveled since the last high or the last low. Okay, in the terms of, I believe it was percent. So right here, if we're kind of starting to measure from this pivot here, the further that it gets away from the last peak or trough, the higher this number is going to be. Okay, and basically, it's not from exactly the trough, because what we're trying to do is we're trying to measure extremes. So what we're looking at is percent change in general. How far has it traveled from the mean? Okay, and so what we decided to do initially with the Heguro method is, we deemed the candles would be more significant if they moved more than 7 points, either upward or downward. So right here, you've got a level that used to be 7, it's now 10, but it used to be 7. And basically, as you got further and further to this line and above this line, you should start to consider the candle numbering more effective, or more accurate, or more important, whatever word you want to use, right? If you're down below this line and you're getting line numbers, you could consider those important as well. Now, we did go in and we made a bit of a change to this just a few years ago. After Corona, we changed our mind in terms of, we deal with a much more volatile market than we were when we designed it. And so we changed those levels from 7 and -7 to 10 and -10. Okay, but since we're up above this 10 level, in terms of this measurement tool, we're going to say that the range of the stock is extended more than 10%. This means the candle numberings that we're looking at are more significant. Okay, and that's all. So basically, the biggest thing that we did to kind of quantify this was, how important are these candles? Okay, how much have they moved from the mean? And that's the only thing that we really kind of put some subjectivity into. Okay, yeah, whether or not you determine they're subjective. So based on the fact that we're at a new high, based on the fact that we're more than 10% from the mean, I would say that this number 2 is more significant than a number 2 that you'd get right, maybe like right when we're here in the middle. Okay. Okay. So what does candle number 2 mean? Okay. Well, candle number 2 right here, when this is a long line, the midpoint is set as a future support for any decline in prices. Okay. This wasn't longer than either of the 2 lines before it, so it did not set a new midpoint. But typically, you'll see a lot of midpoints onto this. Okay. Concerning line 2, this appears at the outset of a rise in the market after a fall in prices, after a further opening price above the midpoint in the following movement occur. So what it's saying here is, like, if during the next week, because we're looking at this on a weekly basis, if wait for the next week's price to open above the midpoint. So as long as we open next week, we're looking at a partial week here. We should be looking at this too. So let's pretend we are looking at this one here, since this is when you'd be doing your Haguro analysis. If the price opens above the midpoint of the line, or above this midpoint, you could go ahead and consider a long position. If the price closes below the midpoint of the line, close any long positions. That's basically saying 2 is a bullish line. If you get any positive trading, you can go ahead and take a long position. Anytime you cross below this midpoint, you should go ahead and get out of that long position. Okay. We have a similar definition that's set up for every single one of them. So right here, if I go down to, let's say this 15 that happened right here at the offset of this chart right here, okay? This expert is intended to be used on weekly charts. The range of this is more than 10%. So we're looking at exactly this blue bar. More than 10%, so you should be more significant. Okay, candle 15 is a reversal line when it's found in a high price or a low price area. So if I was looking at this chart, I'd call this a high price. Okay, if it's found in a high price, you can expect a reversal. Now, it's not always going to happen. Again, it's just a way to kind of look at the chart. But when it's found at a high price, it indicates a possible reversal. So looking at that with that in mind, I'd say that this is a good example where we're at a high price and it reversed. Here was a good example of a high price and it reversed. Here, I'd say this is more of a continuation of a downtrend. I'd say this is also a more continuation of a downtrend, but we're also not at a high price. Okay. Same thing with these 15 and 3s. You're going to be looking for these to occur where it's at a high price or a low price as a reversal. You're also going to want to wait until they're significant. And this is significant in terms of our measurement tool, and this is significant. Okay, so but when it's found at a high price, you'll want to close long positions when the following week, and close below if there's a close below the 15 line, you can take short positions. So saying basically, if this is found at a high price, you can look to actually get out of long positions, and here's some strategies you could use. If it trades below that low, this low here, you could go ahead and take a short position. Okay, all short positions should be closed and long positions open. This line has tested higher prices for short covering. So that's kind of what it does. I'd say the more significant levels that you have are going to be 15 and 3. And that's why those are color coded and highlighted. Okay. That's also why you have scans for 15 and 3. So if I wanted to, okay, this just kind of talks about how we measure significance and what we did with it. Basically, what we figure is the most significant events in the Haguro method is a candle 3 or a candle 15 or the Heguro midpoint cross. Those are the things that you want to look for. And so when we kind of designed some scans, we wanted to kind of be able to identify those. So I kind of just show you the scans that are there. We probably won't run the scan, but just how you can kind of take a look at this. So I'm going to go ahead and open the exploration here. I'm going to go ahead and just type in the word Haguro, which is how you can find it in your MetaStock. And then here you've got, now we also weeded out what we deemed as insignificant. So if I run this scan, not only am I looking for a candle 15, I'm also looking for it to be extended in range, either to the long side, to the upside, or the downside. If I run this scan, I'm going to be looking for it to be a candle 3. I'm also going to be looking for it to be extended in range. Okay, and this one will just list all of the stocks that have crossed through the midpoint on the current week. Okay, so you can run all of those. Those are the most significant events that you want to look for. And there you go. It's just something that we included. I do want to thank Heguro and the ATAA, because they certainly worked really hard on this with me. Gary spent so much time on this thing, but it was one of those things that I'm very, very proud of. We wanted to include it in MetaStock as part of it, and it's a great addition. So appreciate all the work Gary did to help me get this in, and I appreciate the work of Mr. Shimizu as well. I was even afraid to say Seiki. All right, cool. So that's the second thing I wanted to show you. If you have questions, let me know. The third is probably a method in MetaStock that I have shown more than any other. And it's a method that I've traded. This is the first method I actually used to trade my own money. And so that might be enough to give it away, but let's go ahead and kind of move on to it. Again, this is included with MetaStock for free. The DT support and resistance, it's also included with MetaStock. So they're just systems that are included. And I could do a whole series on things that are cool in MetaStock that are just included. So, and I think that was the whole. I was actually talking to one of our new reps today, and I was like, no, this was originally going to be a series. I want to revisit that. In fact, if you're using MetaStock right now and there's something that you really like, type it in the comments, and maybe I'll add it in a future video for things in MetaStock people should know about. So in any case, all right, the third one I want to talk about is the Rahul Mohindar oscillator. Okay, and this one also was a lot of fun. This is the very first methodology that I ever traded my own money with, and it's created by a guy that you might guess by the name of Rahul Mohindar. And it's a method I've shown everywhere. I've been over the years. I've shown it to investment groups in the US, in Australia with the ATAA, Singapore, India, you name it. And the thing that I like about this, I think I have a whole slide about things that I like. So let me just talk about Rahul first. And hopefully that slide will pop up in a slide or two. But Rahul is a long-running distributor of MetaStock. He's a really, really good partner of ours, and he basically helps us sell a lot of programs in India. His primary business in India is he teaches people how to trade. They have quite a few offices throughout India, and they basically, the main thing that he does is teaches people how to trade. So he's been a long-running dealer too. He's probably our longest-running, most successful dealer of all time at this point. So the genesis of this system is one year he was here in the office, and he comes in very, very regularly. But one year he was here in the office, and Scott, the president of the company now, was like, "Hey, show us what you're doing." And so he's like, "Oh, let me show you one of the methods we teach." So he proceeds, is the word I'm looking for. He proceeds to show us this Rahul Mohindar oscillator method, and we liked it so much that we negotiated with it, and we've included it in every version of MetaStock. And it's great. So I'm going to go ahead and basically talk to you. The reason I like to show it to you is here's that slide. It's easy. Like, it's a very, very simple method. It's subjective. It's completely rule-based. It helps you employ solid money management, which I think is a challenge for a lot of people. Where do I put my stops? What am I going to do? I've shown this everywhere. Like, it works on a lot of different instruments, but it doesn't work on all instruments. So we'll be careful with that, the way that we say that. But what I'll do is I'll say, hey, give me some symbols, and we'll pull up a bunch of charts, and we'll look at this method. And it's a very, very simple to use 3-step process. I'm going to teach you all 3 steps. But first, I'm going to kind of talk a little bit about what it is. RMO, at its heart, is a trend following methodology. So what it's designed to do is help you identify what the trend is. What's the long-term trend? What's the short-term trend? And what's the medium? Helps you do that. And you've probably heard, like, the trend is your friend, a rising tide lifts up boats, etc. There's all those cliches that exist out there. But what this is designed to help you do is help you understand exactly what the trend is. It does that on a long-term basis, short-term basis, on an intermediate basis. And because it's so objective, it helps you identify that trend and trade in conjunction with the trend. Now, because it is a trend following strategy, it isn't going to get you in at the bottom of every market. It's not going to get you in at the bottom of the pullback. It's just not what it does. It's not going to get you out of the exact top. With trend following methods, you're looking at what the market's doing and making the big goal for the RMO is to help you find a stock that's trending and take good chunks of the trend while eliminating your losses. While limiting your losses by using a solid money management strategy. And if you understand the rules of RMO, it'll help you do that very, very easily. So if we want to objectively trade with the trend, what we want to do is we want to be able to identify the primary trend. So when I start to talk about trends, we're going to kind of cover 3 of them. The first one, you could call the primary trend, you could call it the prevailing trend, you could call it the long-term trend. And I try to just call it the long-term trend because I think that makes it clear what it is. But all of those words are interchangeable. We're looking at the longer-term picture of what the stock is doing. So what I'm going to do here is I'm actually going to kind of open up a new chart. This has been one of my favorites this year, and you could tell because I had it open, but I just want to kind of show you what this looks like. And if you have an example that you might want to look at, type in a symbol. If not, I'll just show you a stock that's been doing really well this year, and that would be the MetaStock. No relation. Okay, so let's go ahead and open up Meta. So I'm just going to type in the symbol right here. And to get all of the indicators and the expert and everything attached, we're going to apply. So before we added the dynamic trading tools templates, what I'm going to do here is I'm going to add the RMO template to this. So we'll just scroll down a little bit. And we're going to find RMO trade model right there. There's also one with candles. I'm just going to do RMO trade model though. We'll go ahead and open up the chart. And I'm pretty sure the candle one exists because I asked for it. But in any case, let me go ahead and turn off the commentary. We did add some commentary that kind of helps you remember what the system is. It's going to explain the rules, but I'm going to do that too. So, but if you ever apply this in your own MetaStock, it does reiterate exactly what the rules are and what you're looking for right here. Okay, I'm going to go ahead and close this commentary window though, and just make this chart a little bit bigger. And you'll notice that, let's just go ahead and show you how to read it. So if you've been watching Facebook for a while, it's had a really big sell-off. In fact, it went from about 300 to 90. Actually, the high here was like 380. It went down to 90. And around the turn of the year, it started to head up. It's gone back to about 280. So it's been a lot of trendy movement in the stock. That's why I chose it. Okay. The first thing I want to explain to you what you're going to look at is identification of trend. Okay. So obviously, if we want to be able to trade the trend objectively, we need a way to measure the trend objectively. And so the first thing that we're going to look at is this, the RMO oscillator, what's called the Rahul Mohindar oscillator, or the RMO oscillator for short. Okay. This is designed to help us measure the primary trend or the long-term trend or whatever you want to use. Okay. Now, one of the things that Rahul talks a lot about is keeping things simple. So in terms of the way that we read this particular indicator, he wants you to, he always says that size and shape don't matter. What we're looking for is just whether or not it's giving us a bullish reading or bearish reading. The way that we determine that is in relationship to the zero line right here on the chart. Okay. And so either the chart or the RMO is going to be above the zero line, or it's going to be down below the zero line. Okay. Pretty simple. Might be at the zero line, that might be a possibility as well. But for the most part, it's either going to be up above or down below. If it's up above, like it is right here, it has been since, let's call it 1229, all year. It's been in this, it's been above zero this whole year. During that whole time, we'd say that the long-term trend of this stock is bullish. Okay. For the majority of the time before that, with a few exceptions like here and here and here, it's been down below zero. And it's been down below zero since 922. Okay. I'm going to draw, there's been some times where it went over for a little bit, didn't sustain it, went back down. And what I'm just going to do is I'm going to draw a line right here at those 2 dates that I gave you. So kind of show you, so I can kind of go back and I can kind of show you another way to read this. So again, just to kind of reiterate, if it's above zero, it's bullish. If it's down below zero, it's bearish. And we actually say right here, down in this trend ribbon, right here, it says it's RMO bullish, RMO bearish. And as I said before, I'll point out that the exact high was here. We didn't get in it there. We didn't go short there based on the rules. The exact low was here. We didn't get long there either. But right here is where we were bullish, and the stock has gone up significantly. From the first thing that we want to do is we want to trade with the trend. Okay. So the first rule that we're going to look at is if this is up above zero, bullish phase. Okay. If we're in a bullish phase, we do not want to take short positions. That's rule number one. Okay. So as long as we're up above zero, no longs. Okay. We don't trade against the trend. Okay. Following the rules. Okay. Below zero, no longs. Okay. So this whole, for the most part, with a few exceptions, this whole downward move where the stock basically collapsed, went from over 300 to under 100, a big chunk of that we're only looking to go short. Okay. There's a couple of exceptions right here, here and here. But I'd say already now, right here, where this is in this bullish long trend, where we went from, let's see, what were we when it went long? It's called 120 to 280. We only took long positions using the rules. Okay. So I'd say that, like, if you have a stock that's trending really, really well, whether it's up or down, this is going to work well for that stock, because I would say objectively that if we're only taking long positions during this upward movement here. Yes.
I'm sorry to interrupt you. We've lost the video feed. I can hear you, and I'm trying to reset it over here, but I haven't been able to do so. So for about the last 3 or 4 minutes, people haven't been able to see. They can hear you. They just can't see.
Are you talking about the
what you're talking
screen?
about. You've just come back. I don't know if that was you or me.
That was me.
So, but now see you're
You
getting.
can see it now.
I think something might be something on my end, honestly.
Are we okay to go forward?
Give me just a second, please.
Okay.
Give me 1 minute, please.
Okay.
So, Jeff, I'm
All right. All right, and see my screen. All right, cool. I'm going to recap real quick. So, and then we'll kind of pick it up where we left off. So right here. Okay, very cool. All right. So just to kind of recap what we're kind of talking about right now, we're talking about the long-term trend, which is all built on the RMO oscillator. Okay. So when it comes up above 0, you'll see that it's RMO bullish. When it comes down below 0, it's going to be RMO bearish. Just kind of the point that I was making is if we're only looking at the long-term trend, trading in the long-term trend. In other words, if we're only, and this is the rule for this system, I'm going to go through all 3 rules. But if it's the only rule that we're looking at, I believe that it is objectively going to help you put the option. So what I mean by that, this certainly doesn't work all the time. But if I'm only looking to go long while Facebook is going up, in other words, it went from like right here about 120 to about 280. If I'm only taking long positions, I think that's going to help me make better decisions. Okay. Same thing here. While we had this dramatic bearish downtrend, if I'm only looking to do short positions, there's going to be times where I'm going to lose, just especially if the market is choppy. But if I'm looking to trade in the direction of the trend, that's one thing that I can do to kind of help me put it. So rule number 1, just kind of in a nutshell, because I know we had a bit of a technical issue. If we're bullish long-term, we only can take long trades. If we're bullish short-term, or bearish short-term, meaning this is below 0, and we're getting a bearish reading down here on the trend ribbon, we only have the opportunity to take short positions. And that's all that's basically rule number 1. If we're above 0, we're bullish. We don't short when the market's going. Okay? All right. So as long as that's bullish, we're going to be looking to place only long positions. The other thing, when I started to talk about it, we talked about the primary trend. Now we're going to talk about the short-term trend. Okay, just to kind of recap that again, if the RMO is in a bullish zone, you're allowed to buy, no short. If it's in a bearish zone, you're allowed to short, no long. Okay, it's not a trigger either. So it's also again, Rahul is very, very specific. It doesn't matter if it's way above or way below. It's either bullish or bearish, and that's how you're going to be. Also, if it just goes from bearish to bullish, that's not a trigger. That's not a trigger to enter the stock. It's step 1 of 3 steps. Okay. So what is step 2? Well, step 2 is we want to look at the short-term trend. Okay. The short-term trend, we want to see if it's in alignment with the long-term trend. So then going back to my MetaStock chart here, if I wanted to kind of talk a little bit about what the short-term trend was, I'm going to kind of zero in a little bit. I'm just going to zoom in so we can kind of see it a lot clearer. Okay. And then what I'm going to do is I'm going to kind of make this a lot bigger so that you can see it clear. And then what I want to say is what we're going to talk about is we're going to talk about this pinkish magenta-ish line. I'm going to actually change the blue line though real quick just by double clicking on it. I prefer to view it as a line. And anytime you want to change something in MetaStock, actually let's do a field line. That's cool. I'm going to go ahead and do a field line, okay? And then that way I can kind of just see where the red line is a little bit. Okay. Now the magenta line is the one that we're going to focus on. It's kind of this pinker line. And we are going to read it the same way. So if it's above 0, and it's been above 0 this whole time, it's also going to mean that the trend is bullish, but instead of looking at the long-term trend, you're going to be looking at the short-term trend. And you'll notice that this is a lot more reactive to price movement because the time frame, the look-back period that it's using is a lot shorter. Okay. So if we're looking at this, though, from a large perspective right here, we went from being below 0 to being above 0. And ever since, on a short-term basis, we've been bullish as well. Okay. That back here where it was down below 0, on a short-term basis, we were bearish. Okay. And the way that we kind of show that on the chart is the way that the chart color. So if I look at where that line is drawn, where that went from bearish to bullish, ever since that's turned to bullish, you've got a blue bar. So you've had a blue bar kind of started right here. It's been short-term bullish. It's been short-term bullish basically since November of last year. Okay. So just because it's short-term bullish, again, we're not going to trade it. But if I'm looking at the hard right edge of the chart here, we're long-term bullish, we're short-term bullish, and we have been for a while. And until we get a sign that this stock it was weakening, that's a lot of strength there. We're not going to take a short. Okay. So right now, if we look at the rules, we're always trading on this edge of the chart. Bullish long-term, bullish short-term. That means I'm allowed to go long. Okay. So, and we're not allowed to short. Okay. So if everything matches up, if we're long-term bullish and short-term bullish, we're allowed to buy. Okay. We haven't talked about triggers or entries or how that works. I'm going to cover that in detail. Okay. And we're going to go probably about 10 or 15 minutes over today. But I do want to take my time and not rush through it, just so you understand. Because I think if this is something that you use, it can be helpful for you. Okay. So in other words, I think it's kind of important to make sure I explain it properly. Okay. The next thing that we want to look at is we want to look at these two indicators again. So the pinkish line is short-term trend. The blue line that I just changed to a blue filled line is what is called the medium-term trend. Okay. And with the medium-term trend, we're not really looking to see if it's above zero or below zero. What we're looking at it is we're looking at it in conjunction with the short-term trend to measure what Rahul would call a shift of momentum or a change of direction, change of course. So, like for example, if we're kind of just to kind of the best way I can kind of explain it, let's look at it right here. Here we had a bit of a pull back in kind of your medium-term trend where it crossed down below. That's a bearish shift of momentum. Here it kind of came up almost up to it, but it didn't kind of make it. It came down. But right here we had a cross above. So in other words, we had the medium-term trend went up. The short-term trend went up above the medium-term trend right here. And that's a bearish shift or bullish shift of momentum. And that's also drawn on the chart. I like the way Rahul implemented this because you can look at the indicators, but if I want to see that momentum shift on the chart, I can look at the chart. And every time that momentum shift happens and it's a bullish momentum shift, you're going to get a buy arrow on the chart. Okay. Every time that momentum shift happens and it's a bearish momentum shift, you're going to get a sell arrow on the chart. And when it happens, bullish and bearish, and you kind of see every time that comes in, it's going to give you a marker. Okay. And that is actually that momentum shift is going to be the entry point. Or actually, that's not the exact entry point. I'll say that in a second. But that momentum shift is actually going to cause us to determine an entry level. Okay. So, and I'll talk a little bit more about this. And I'm going to go back a little bit in time to right about here. Okay. This day in particular. Okay. And I'm going to because I want to be able to kind of talk to you not only about how you'd enter this trade, but how you would move your stocks. Because again, money management, I think, is a very important part of how you trade. And where do you lock in profits? It's always a question. Whether you're advanced, whether you're a beginner, whether you don't know what you're doing, where to put those stops is always a pretty important question. Okay. But also where to put the entry. So let's just say for the point of showing you how this works, that we started to look at Facebook right here on December 27th, right after Christmas, looking to kind of buy some money. We've heard MetaStock, the Meta platform stock, has been selling off. So maybe we might want to be looking for an opportunity to buy it. So if we start looking on March 27th, we can see at that point we're in a bullish zone, right? Long term. We're also in a bullish short term. So, but we don't have any momentum shifts within a few bars. I wonder when our last one is. Not for a minute. Okay. So if we're starting to look at it right here, okay, short term, actually, we're bullish. Long term, we're bullish, but no signals to get in yet. Okay. So we look at the next day, and we actually have that momentum shift to the downside. So we're starting to show some weakening in Facebook, of a momentum shift. We go into a bearish trend, but on a medium-term basis, or on a short-term basis, we're still above zero. So the conditions aren't quite right to take a short position. We want all three things to match up. Okay. Especially when the chart's as flat as it is right here. You know, we had that big sell-off, but Facebook has been kind of not decisive on a direction for oh, wow, if you just kind of look at all these charts, they're not going too much of a direction. The next day, we have a bullish shift. We go up above 0. Okay. So now we're long-term bullish. We're still short-term bullish, so we still have our blue bar. And we have that shift of momentum for the top side. Okay. And if now I'm looking to actually kind of place a trade, everything is lined up. All three of those criteria, the bullish trend long-term, the bullish trend short-term, and the shift of momentum positive to the upside, the bullish shift of momentum. All of those things are telling me that it would be a good time to go ahead and structure a long position. And I try and be careful when I say that, because at this point, what we want to do is structure a long-term position. So to do that, what I'm going to do, I'm trying to actually kind of just pick this line, but it won't get it for me. So there we go, delete. I've been trying to, I must have put a few of them on the chart. Wow, I put a lot of them on the chart. Okay, well, anyway, in any case, right now, just to kind of recap what we're doing. Right now, we've got a bullish bar. This is the bar that we're deciding to buy. Okay, right here. If I want to go ahead and take advantage of that trade, there's one additional confirmation Rahul teaches his students to use. And that would be to look at, and what he would do is he would look at the high of the bar. Man, we're having some problems today. I can't get those bars. Oh, I think I know. I just figured out what the problem is. Oh, I've been trying to. That's a lot of lines. Okay, anyway, that's so many lines that I'm just going to leave them on there, actually. Look at how many lines I've actually drawn. That's my fault. I know the setting that caused that. But what I'm going to do is I'm going to look at the bar where everything matches up. And what I'm going to do is I'm going to look at the high of that bar. Okay, and it's right here. Okay, I'm going to look at the high of the bar before, which is right here. I'm going to make an assessment. This is the higher of those two values. I'm going to take a horizontal line, 1 this time, and I'm going to draw it right above the high. Okay? And that's my entry point. So if I'm going to buy, I want to buy as the market is moving strong above. And so this is just one more confirmation. He wants it to break out of the tie of those 2 days. And if it does that, we're going to go ahead and place our entry signal. Okay. The other thing that we want to do is we want to determine before we trade, if we get into this trade, where we're going to get out. And there's 2 ways that he teaches to do this, and to set this as a stop loss. Okay. The first is exactly the same way I just told you. Like you can look at the low of this bar, you can look at this low, and that low is right about there. Okay, I put it right there. Okay. Or the other one is he also says, look for a recent support area. Okay. So if I wanted to kind of just give it a little bit more room to wiggle, I'd call that a recent support area, and I draw my line right here. Okay. Because I just keep getting more lines that I expect. Okay. So for me, what I'm going to do is I'm going to put my stop right under this, what I'm going to call support area. Okay. If it fails this support area, that's where I'm going to sell. And in this case, it's going to be 112.30. Okay. And what I like about this, a few things, is I know what the stop loss is going to be before I get into the stop. Okay. 1. 2, I'm also basing what my stop loss is based on what the price activity is. I didn't say I'm going to get out of the market at 112.30 because I can't afford to lose anything more than that. What I'm looking at is I'm going to say, if this support area fails, well, then I want to get out of my stop. And I don't want to think about it. I just want to get out. Okay? So, and I also know my approximate entry point too, right? So if we go up above 121 in the next several days, I'm going to go ahead and buy into the stock. Okay? If I get in, I'm going to get in as close to 121. Okay? Or whatever this level is, 121.45. If I get out, I'm going to get out at 112. So I have a good idea of what risk is, as long as there's not a huge gap overnight, okay? Which can happen. Okay. But right now, what I'm making is decisions of where I'm going to trade before I get it. And I think that helps with discipline. In other words, I don't wait till this thing goes down to 90 again, sell it then because I've lost more than I can afford to lose. I've already made the decision in terms of if I'm wrong, that's where I'm going to not any lower. Okay? And I think making those decisions is easier to do before you trade than after as well. So let me go ahead and kind of zoom a little bit forward here. We'll kind of leave that line on the chart. But the next day, we didn't go over. Okay. The day after that, we went over. Okay. And then we had a nice run up. We've already seen the chart of that. Been a great stock to trade this year. Okay. Then we start to head up. Straight up is maybe not the way to describe this. We had a nice little move up. If you're in a long position, you feel pretty good about this. We have an overnight gap here. Okay. Settled down a little bit, and it settled down enough that we started to get that bearish shift of momentum. And that happened, just to be clear about where we're talking about right here. Okay. Now, when that happens, we're going to start to pay attention a little bit more, because we'll stay in this trade because we're bullish long term and we're bullish short term. But if we start to lose 2 or 3 of those things, I usually wait for 3 for my stop loss. I'm going to go ahead and get out of that. Okay. But the market does have a tendency to move up and back down a little, move up, come down a little. It's never, with some exceptions, it's not usually a straight path. It's more of a stair-step pattern. Okay. And so we would expect a bit of a pullback, especially if we had a gap like this. So what I'm going to start to do is start to pay attention, because if I go bearish long term or if I go bearish short term, if all 3 of those match out, I'm not long anymore. I'm looking to reverse a position using the same rules. Okay. But if we're kind of just going to set a new support area and start to move back up, which is kind of like what happened a little after this gap, what's going to happen is you're going to get that shift of momentum again, but this time to the bullish side. So what we had is we had a nice pullback. We set up a new support area, and now we're starting to, well, hopefully head up again. But when this happens, when we have this new shift of momentum right here that happened on the chart, there's 2 things that Rahul says you can do. I only do one of them, and this is the one that's not optional. When this happens on a chart, well, what we want to do is we want to be able to move up our stop loss. Okay. So in this particular case, we've had a good move on Meta. We've set up a new support area. I'd call it right here if I was looking at it. It would make sense for me that if this doesn't hold in the future, that's my new line in the sand. That's where I'm going to start to look for a different opportunity to scan. Okay. So using the same rules that I used before, I'd say that this right here is kind of that support area. I'm going to draw a little bit line here. And now what I'm going to say is like, okay, if for any reason we go down 166 lower, I'm going to go ahead and get down. Okay. It didn't go up from there. It kind of set up a new area here. We had a bearish shift of momentum followed by a bullish. And at exactly this point, I'd move up that stop again to right here, right under that pivot level. Okay. Comes up a little bit, pulls back a little bit, have a new shift. I'd put it right under that point. Okay. And these aren't, I'm just basically picking kind of a pivot low as a low surrounded by 2 higher lows. It's a great area for me to find a support area. Okay. Here we have a bit of a sell area. Okay. But we're still bullish long term. But you kind of get the idea. It gets pretty easy after that. Okay. Here, I'm going to go ahead and put that right here. When I have this buy arrow come in, and we're going to hit it. We're going to stop out of this trade. Okay. We ended up getting in, what was our initial level? 121 over here. We ended up stopping out of it at 233. Okay. Was it the exact bottom? No. Was it the exact top? No. Again, what we're looking for is, and this worked great with stocks that are very, very trendy, like Facebook has been this year. Did the stock continue to go up after we stopped out? Yeah, right here. A few days after we stopped out, we got a buy signal. And if I'm looking at the Meta right there, and I've stopped out, and I'm getting a buy signal in a bullish trend, I'm going to rinse and repeat. I'm going to go ahead and buy above that high, set up a new stop loss, and let it ride, and let it keep going in that kind of direction. So even if we stop out, if the market, if we're wrong, we can always buy back in. But that's a little bit of how RMO works. Anise, I love your question. I'm glad I looked over here for a question. Anise said, is it possible to do stock scanning based on RMO? So yeah, absolutely. So let me show you the scans that are built into RMO, Anise. And I love that you set me up for that question. So if I come in here, I think terms of one of the, I talked about the list I made for my mother-in-law earlier and how support was good. But I think one of the things we absolutely do best is scanning. You can scan any market, you can scan whatever you want, and can you scan for RMO? Yeah. So there's a few scans that are built in here. I'm not going to run them, but there's RMO. This will list all the stocks that are in a bullish zone. So I can start that there. Okay. If I wanted to see a new blue, I could actually type in a new blue here, could run that scan. But yeah, absolutely, Anise, you can scan. You can make a list, and you can say, okay, well, out of the S&P 500, I want to find all the stocks that are in a bullish zone long term and have a new trend blue. You can absolutely do scanning in MetaStock based on RMO. So thank you for that question. Anise, are you a MetaStock user? Let me know. I'm interested. So if you are using MetaStock, those are 3 tools that I think in MetaStock we'd hardly ever talk about. But I absolutely think they're some of the best tools in MetaStock. So play with them. They're included. Hopefully I showed you how to get to them. But yeah, there's a few more slides here. But they are very, very, very good tools. I think one of the things about MetaStock is, there's so many things that we've put in here. We've been working on MetaStock since the 80s. There's a reason that it's been rated 30 years in a row. But there's a lot of really cool stuff. One of the things I like about MetaStock is it's a very, let's call it a deep product. It's not something you're going to grow out of. As you develop as a trader, so you learn more things, you're going to be able to implement it. It's not a simple methodology or a simple charting software that's been around for a couple of years that may or may not even do market scanning. It's something that you'll learn, and as you grow, it's going to grow with you. So let's talk a little bit. If you're new to MetaStock and you want to try out MetaStock, well, I appreciate that too. We basically have 2 versions of MetaStock. Let's cover this real quick. We have what we call MetaStock RT. RT stands for real time. It's $265 a month, and it includes MetaStock and an institutional quality data feed that I didn't even talk about today called Zenith. And I've had people tell me that it's like getting Bloomberg when they sign up for Zenith. It's really a good data feed. And if you're interested in news, or fundamentals, or that kind of stuff, just to give you a quick number, they spent $1 billion on it. To give you another number, it has 3,000 supporters and 3,000 reporters in about 300 different news bureaus. It's a massive institutional quality news feed that offers all kinds of stuff around fundamentals, news, and research, and all that kind of stuff. And so we bundle that with MetaStock. The price point is $265 a month. That includes MetaStock. It includes that Zenith real-time data feed. It doesn't include exchange fees. So like Forex is real-time, but if you want real-time data from New York Stock Exchange, they charge you I think it's like $4. You have to pay New York Stock. You pay it through us, but it's an exchange fee just to get real-time data. So the end price might be a little bit more than that just because you have to pay exchange fees with them. Okay. We also have an end-of-day program, the MetaStock DC. Everything I showed you today, like the DT scanning for like support and resistance breakouts, the Haguro method, the RMO method, everything you can do in either version. It's very, very, I wanted to make sure I showed you stuff you could do regardless of the version of MetaStock you're using. So our MetaStock DC program is $69 a month. And then what we're going to do to kind of help you get started is we're going to do what we call an extended trial. So if you pay either $69 for DC or $265 for real time, what we're going to do is we're going to do a whole bunch for you. We want you to keep MetaStock. Most of our customers have been with us for a really long time. And I like that too. We were looking at some statistics and some surveys the other day. A good chunk of our customers have been with us for more than a decade. As we want you to be kind of with us for a decade or two. You know what I mean? So what we're going to do is if you pay for a month at $69 or $265, we're going to give you the second and the third month. So basically, if you sign up today, you'll be running until September 29th, 2023, which feels like forever from now. But during that 3-month trial, we're going to give you MetaStock, or that 3-month extended trial, not free, extended. You have to pay for a month to get the 3 months. You get MetaStock 18. You get the data region for whatever data you're interested in, whatever part of the world you're interested in. We'll include the data for. We'll give you. We'll have a service. This is really cool. We do a white glove installation support appointment where they'll help you install it if you want. They'll sit down with you. They'll show you scanning if that's what you're interested in, or if you want to do testing with our system tester, they'll show you how to do that. If you just want somebody to kind of walk you through the rules of RMO or show you how to do the DP scan I talked about at the first of it, they'll help you with that. So that's what we call our white glove installation support. We set up a 2-hour block where you can have a one-on-one discussion with one of our professional support reps. And you'll also have, like if you have questions after that, you have unlimited access to our support reps by phone, by chat, by email. So don't worry, it's not just a one-time support opportunity for you. If you have questions, we want to help you. So we'll also give you a training video that talks about, the core tools of MetaStock that we normally talk about, like scanning or system testing and that kind of stuff, and how to implement those. Normally that's $99, but honestly, we never really charge for it. We want you to use MetaStock. We want it to help you with your trades. We want it to be valuable for you. Because if it will help you identify trades, it's probably worth $69 a month. So I encourage you to try it. So what you can do is there's a couple of different ways. If you're interested in kind of doing that extended trial, you can go to MetaStock. And yes, I am. I forgot to update that. So I'm going to actually kind of just change the URL real quick on the fly. Give us a call though, 800-882-3040. You can go to metastock.com/sales-chat, and if you have questions, they're really good. I'll answer them for you. Or you can go to metastock.com/3for1. And any of those links that can help you get rolling, set up, running for the software. So if you haven't tried MetaStock, I love it. I use it every day to help me find trades. I love the scanning. I've been trading for I've been working here at Meta. I wouldn't say I've been trading for 20 years. It took me a while to start trading and get some capital up. I've been here for 20 plus years, 26 years or something right now. And I would say that scanning is something that I do every single day to help me identify those opportunities. I think it's something we do really well. But in addition to that, you have Tester, and it's such a great product. So if you do the extended trial and you pay $69 for 3 months, you can try it for $23 a month. And then at the end of that, if you feel like it's something that's helpful, you can keep paying for it. There's no commitment to keep paying for it. So give us a call, 800-882-3040, metastock.com/sales-chat, or metastock.com/3for1. If you've been using MetaStock for a while, I appreciate that. I hope this was helpful for you. I hope you learned something that you maybe haven't been using before. Maybe it's something that you'll implement. If you happen to work with us with the ATAA, Jerry, it's good to see you. Thanks for coming in today. Thank you. In any case, thanks for coming. And he says, is it possible to get Stephen Bigelow's candlestick? I actually really like Steve Bigelow. It's actually one of our most popular add-ons for MetaStock. And what we do with that one, Anise, is if you want to try that out, we'll give you a money back. So you pay for it up front, but if you decide you don't like it, you can get an absolute refund. So yes, you can get it as part of the trial. Hope that helps. Thanks for coming, everybody. I'll see you again at the next one. And stay well, stay healthy, be well.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.